Good morning and welcome to Kramer's Corner with a daily technical update. It is Wednesday, the 8th of January, and as usual, this video is for educational purpose only and to show you how I use technical analysis to read the market and how you can use it too. Here today we'll start with Nvidia that got hammered yesterday after actually opening at new all-time highs, but it couldn't stay above and got sold off throughout the session and closed much lower, and that will be key to what's here the next couple of days. We're still in a positive sentiment on the RSI. We are not below the cloud, we are in the cloud, so they're neutral. Key support down here around the 130 level, 128.70. If it takes out that, then we have a completely new situation, meaning that then the bullish trend has reversed, and we are likely to see much lower levels. I think we'll see here the next few days a bit of a range bound in this area around 140, but it really needs to take out the the peak from yesterday to resume a bullish trend. That, of course, also dragged the main indices lower. S&P 500 couldn't stay above the 6,000. Tried again yesterday. It was just above it during the session, but closed lower. If it closes this gap here, that is the key, 5,783 below that, then we are in a bearish market. So let's see about that. For now, we are still in a bit of a neutral situation here. Pre-market we are up a little bit, but not much, so that can easily change. Nasdaq, of course, got beaten even more. If it takes out 20,896 and closes below that, then we could see further selling pressure towards 20,000 levels, toward 20,227. But let's see. It's still not there, and there's still no divergence on the RSI. So there's also a divergence between the S&P 500 and Nasdaq, actually, where the Nasdaq looks a little bit better in technical terms than S&P 500. On the Dow Jones index, actually had a fairly quiet day, only down 0.4%. Support here at 42,221, and it is actually under pressure. We have negative sentiment on the RSI. No divergence indicating we could see lower levels. We got back below 40 threshold again. So if it takes out that, then 41,563, I think it will be taken out, and I think we'll be looking at 41,000. So that is really some key levels to watch out for. It needs to move back above 55 moving average and 43,374 to establish a bullish trend. European markets closed higher again yesterday after a very strong Monday. Also Tuesday followed through. We got the Eurostoxx 50 back above 5,000, and there is not much stopping it until around the 5,100 level. We can see these peaks back over here, coming back from last year. They are now in sight. There is bullish sentiment, a positive sentiment on the RSI, indicating likely higher levels here. Pre-market unchanged. The Eurostoxx 50 trading around 5,000. DAX index pushed higher yesterday also to the 786 retracement of this correction here. Could see a little bit of a setback maybe today, but we are in a bullish trend, and there is potential to a new all-time high. So let's see about that. If it slides back below 20,000, then we are back in neutral position. CAC 40, CAC 40 is got rejected here at 75.11. But we are in a positive sentiment, and we have established a slightly positive trend, but can it actually follow through? That will be the key here the next couple of days. On FX, and euro dollar got rejected once again at the upper falling trend line here. And we could slide lower. It really needs to take out that, and it needs to close above 104.64, a bullish move towards 106. But there is some overhead strong resistance with the cloud area here, and we have the 55 moving average, and then of course the 106 resistance area here. So it'll be a little bit of a struggle. However, we are in a downtrend exhaustion mode, and if we look at the weekly chart, I think just to refresh our memory, we can see how it bounced off the support there at 102.25. But we are in a bearish trend. However, let's have a look at the RSI 29.29 there and 29.99. So there's actually a little bit divergence here. So we should see a bounce, a correction higher here in going into mid-January. Cable, more or less the same picture really. You can see there's still potential down to around 123, but also rejected here the upper falling trend line, and it needs to get back above 126.15 as we talked about yesterday, also the past couple of days, for meaningful stronger correction. But that will also, there's some strong resistance here around 127.55 moving average coming down, the 200 and the 100 also putting pressure on. So I don't think we will establish a bullish trend on cable anytime soon. It really needs to get back above 128.13 to do that, and that's not really in the cards, I believe. If it takes out the lows here from 123.50, well, then the lows here back from earlier last year will come under pressure at 123 and lower levels towards 121, 120. Euro sterling hasn't done much really. Still can't really get above the falling trend line there, so that is needed for a push up to 83.75 to turn around this bearish trend. Yen pairs are fairly muted, a little bit higher here on dollar yen. Yesterday crawling a little bit higher, but the RSI is really not supporting that. But still trust the trend as long as we are above 155.95. Well, then we are still in this short-term bullish trend despite showing some divergence, trend exhaustion. However, all moving averages are rising, so it's supporting the underlying bullish scenario. However fragile it is. Euro yen couldn't even touch the 200 moving average this time before sliding lower, so we are still caught in this range here, and 165 is still key to be broken. Positive sentiment on the RSI suggesting it will do it, but it is not convincing, so I will wait for confirmation of that 165 level. Aussie yen also fairly boring here, rejected once again at 55 and 100 moving average. We are below the cloud. We have negative sentiment on the RSI. I still think we will see it sliding lower in the coming days and weeks. The sterling yen, well, sterling yen got rejected at 786 retracement with a little correction here at 197.94. We are above the cloud. We are above all moving averages. We are in a positive sentiment on the RSI, but it really needs to get some action together and push higher, take out 198.96 for a push higher, and then we have still just below 200 here. So it's not that convincing to be honest. On Aussie dollar, well, the bounce has really fizzled. Couldn't get above the upper falling trend line. At least couldn't stay above it. Spiked a little bit above it, and it really needs to really close above it for a push towards the 38.2 retracement at 63.75. Some resistance also in the region around 63.35 here. So it is a little bit. It is a bit fragile, and if it takes out the lows here, which it could, because the RSI is still in negative sentiment. There's no divergence indicating we could see lower levels, and if it does take out the 61.70 there, well, we really have to go far back to see levels here. I mean, then we are talking about 60 and all. I mean, that massive spike down there in 2020, but let's see. So I would be very cautious at the moment. I want to see it taking out the spike up there at 63 and a change before I would go. I would believe that we will see a stronger bounce on Aussie dollar. The dollar Canada crawled back above the 143.35 resistance that it actually support that actually closed below, and then now is resistance. Let's see if it can stay above. If it starts sliding back lower again and closes below, well, then expect a push down to around 142.20, possibly a lower. And sterling Canada is still in this limbo here. Can't make up its mind. Has it done really the potential target? Is that what it is at 178? I think we will be range bound here around the 179 for quite some time. Sometimes it's just stay on the sideline and wait for direction. We are in a bearish trend, however. but not confirmed by the RSI, still in a positive sentiment. So it's sometimes it's hard to give a direction, and in this case, the only direction is currently down. If it can get back above the rising trend line or neckline here towards 181, at least above 181, then maybe it can start resuming uptrend. But for now, I'm very skeptical about that. Dollar Swiss still below 94.50. I think it will test it and maybe also break it. I mean, we are above the cloud, we are above all moving averages, we have positive sentiment, but it's not really convincing, is it? And we have the 200 moving average kind of putting a lid on it. So I think the upside potential is fairly limited to around 95. But we have higher lows and higher highs, but it is struggling to follow through here. So I expect still dancing around the 94 before we could see a push. If it takes out the lower rising trend line here, well, then the downtrend will resume. The dollar Swiss, well, bounced strongly, didn't even get down to the 38.2 retracement at 89.80, bounced at the 90 level and could bounce further, but I want to see a breakout either to the upside here or to the downside of the support for a correction down to 89. So I will also stay a little bit on the sideline, see, okay, what's actually going on. If we're looking at the weekly chart, we can see what's going on here. We are actually around the 200 weekly moving average, then that's giving it some trouble. If it can take it out once again, it's actually spiked a little bit above, then there's potential up to 92.45. Dollar index, more or less the same picture, really. Bounced from the 107.55, could bounce further towards the previous peak, but it is a bit fragile. We have divergence on the RSI. You see the peaks here is lower, they're lower than this one over here. So if it takes out 107.30, then I think we'll see it push down to around 106.25. Gold is also in wait and see mode, just below the cloud and just below the 55 moving average. Both were tested again yesterday. Still higher lows here. So I will also wait. Will it break below the rising trend line here, or will it actually establish itself above the 55 moving average and the cloud? That will be key. On silver has trouble following through, spiked higher, but still a little bit of limbo. But it is above the 200 moving average. We have divergence on the RSI indicating trend exhaustion. We have this double bottom-like pattern. So there should be potential up to around 30, spot 75, 31 level here. But then we have the 55 moving average coming down, kind of putting a little, giving it a pressure from the upper side. And we have the 100 moving average also. Giving it's kind of putting a lid on it. So if we get up there, I think that will be it for then. If it starts sliding back below the support here at 29.85, well, then it could slide back lower towards the 29 and the previous lows here from December. Copper had a fairly strong bounce, really, but it reached the 61.8 retracement over 420.90. Of this downtrend here, and now it's facing some obstacles with the 55 moving average. I think we could see it sliding back. We also have the RSI that hasn't moved above 60 threshold. That would be key for it to really establish a bullish trend. On the energy side, we have the crude oil slowly crawling higher. WTI now reaching $75 almost, and the 200 moving average that can give it a little bit of a hard time. But I wouldn't be surprised to see it spiking higher. But we have strong overhead resistance in this area around 77 and 78.5, and that could be the exhaustive move. But let's see about that. Still positive sentiment, no divergence on the RSI, indicating there's still a room to move higher. Brent Crude oil, more or less the same picture, lagging a little bit, but also we have the 200 moving average coming down here. There should be potential up to the 81 area. On the Dutch TTF gas that bounced yesterday after touching the 38.2 retracement at 46.34, just spiked below and bouncing, and just opened here a little bit higher, or more or less unchanged, but still, nevertheless. that could be it of the correction, and we can see positive sentiment on the other side, no divergence. There's still room up to 56, 57, as we can see here on the weekly chart. Henry Hub natural gas, well, still the same as we talked about, hovering around the 350, 370 level. And can't make its mind up, but for now it's good for the American consumers or household that it doesn't close above $4, but because if it does, then I think it will go really give it a push much higher. The US 10-year Treasury yield took out the 463 resistance yesterday and now have potential to 4735, the peak here from April last year. We are in a bullish trend on short and medium term, and there is potential to even higher levels than that. But I think we will see a little bit of correction after hitting that. We also have a little bit of a divergence building up here, not confirmed yet, so let's see here. But we are in a bullish trend on the US 10-year Treasury yields. The 2-year, on the other hand, is still in this sideways range trading mode here. Let's zoom in. All right, there we can see between 415 and 437. Just below the 200 moving average, but we see 55 giving some support there. We are in a positive sentiment, so I think it will crawl higher, but not as much as the 10-year. The EuroBund future, well, we talked about it yesterday that it could actually touch the 786 retracement at 131.85 and very close to here this morning, bouncing a little bit. Let's see where it ends today. If we can get a bullish engulfing pattern, meaning if we can close above the open yesterday at 132.31, well, then we have a bottom and reversal pattern in place. But let's see about that. But we are still in a bearish trend. All moving averages are now declining. We are below the cloud. Negative sentiment. We know divergence on the indicator indicate that we could see lower levels really, and this is not a strong support. It's just a correction level. On the weekly chart, we can also see what's going on here. Still positive sentiment on the RSI, but it's not convincing, and we are in a cloud here, so we are also below all moving averages. So really under pressure there on the medium term too. Long the UK gilts. Got hit yesterday again. We're selling, took out the lows there, is now on course to test the lows from 2022. I think we will see it maybe also taking it out here fairly shortly. There's really not much holding it, to be honest. Of course, there will be some support here and there will be some headlines, so let's see what's going on. There's a slight divergence, as you can see here on the daily chart, and just to show you these levels here are higher than here. However, it closed below the rising trend line here. That could indicate we are likely to see lower levels. So let's see about that in the coming days. And it really needs to turn around and get above this 92.88 level to just get back into neutral. Bitcoin got hit hard yesterday after actually getting back above 100,000 and 102,000 even, but couldn't follow through and got beaten back down below 100,000. And seems like this morning here, it's also now below the 55 moving average. Key support around 90,680, and that should be observed. If it takes out that, well, then we have reversed the trend and we are in a bearish trend. So that could be key here next couple of days. But it's like it was also hands off there, or risk off basically on Bitcoin yesterday. Ethereum got also hit hard after reaching the 61.8 retracement here at 37.22, back below the 55 moving average, and back in this area around 3,400. Could slide lower, so let's see about that. It's really under pressure also. It really needs to get back above, take out that peak there at 37.46 to establish the get the bullish trend back. For now, it is really under pressure and could slide lower towards 3,231. All right, that's all for today. Sorry about my voice. I have a cold and a cough. I hope you could still hear me. To talk to you again later, and have a nice day.